answer some emails, so I can't be mad at all. Can't be mad at all. Man, it's just good to see everybody. Cassie, what's going on this morning? Who else we got? Marcus in the building. What's up, Marcus? What's up, boy? Oh man. Good morning to Facebook and Instagram. Good morning to Twitch and Periscope. Good morning to Clubhouse. Lottie Dottie and everybody. It's good to see y'all, man. Let's get right to it. What we're gonna focus on today is just making sure that we're patient and that we take the lowest hanging fruit in the market. Oftentimes we try and rush the process. We want to trade, so we trade. We want to invest, so we invest. We throw our money because we finally got it and we have a little bit of knowledge. So it's time to hurry up and do it. And I urge you all to not do that today. Today we're going to take our time. If you had one trade that you could take, what would be your perfect trade? Don't rush it. Don't rush it. Take the market. Take the time and take the market for what it is. Don't trade it for what you want it to be. That's what we're going to focus on today. And we'll just go with it. You know what I'm saying? Do me a favor, everybody, hit that plus sign, try and, ping everybody into the group. If you got family, friends, everybody interested in getting to the bread. So I'm going to show you how to do it. Let's get to it. If you're following along with me on TradingView, or if you're on Clubhouse, you can go like TradingView, or you can go to Thinkorswim or something like that. You just want to check out the US 30-year Treasury bonds. And if you're looking on Facebook and YouTube, you're following me on the rest of these things. I'm just going to share my screen so that way we can get to it. Here we go. I'm going to share the whole screen. Yeah, let's do it like that. All right, cool. I had a resting order at 168.11. I really wanted it to get hit last night because I know that that's going to be a major area of support. But you know how I like to start the day? I like to start the day finding the four levels. The four levels are the open, the overnight high, the overnight low, and the market open. The open is defined just simply as the first price traded. You see what I'm saying? The first price traded. Is that Craig? Craig, what's up, boy? What's up, baby? Big dog, what's going on?
So my brother.
I'm feeling good. How about yourself?
Everything, I'm blessed, man.
That's good, man. It's good to see you. What's going on with you, kid?
Man, let's get it.
What's going on with you, kid? You all right?
I'm learning this options game, bro. I'm learning this long-term strategies, bro. I'm taking my time with it, though.
Okay. I like that, learning the options. Who you learning the options from?
Self-taught.
Okay. All right. That's cool.
Yeah, but I'm about to. I'm pretty much gonna have to join. I'm gonna have to become a bully dog real soon.
Well, I teach the futures, so it's a little different. The options game for me is a game that has less mathematic control. They tell you how much each price costs, and they tell you about when your expiration is. And in the futures game, you can control more of the math, your risk, how much money you want to risk, your reward, where in the course of things do you take profit. You also can control your entry. So what price would you like to enter at? And because you can control more of the math, you can make sure that most of the game goes in your favor, so to speak.
Indeed.
You know what I'm saying? You can I trade the futures. It's a cool thing. We have an open today, 169.13, the first price traded of the day. There was a big, huge drop. You know what I'm saying? Overnight, we achieved the overnight high of 169.20, everybody, 169.20. But I don't know exactly why. I'm not sure if it had to do with the impeachment or anything like that. But I mean, the bonds the bottom fell out of them. You know what I'm saying? We had 1 hourly candle that went from 169.20 to create our low today. And our low is 168.22. So nearly a 32 tick drop. That's almost a full point in the bonds. That's pretty drastic. And leaving in its wake a big gap. Huge gap, monstrous gap. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Gap, just like huge. So I think everybody's trying to figure out how to play this gap. In my opinion, that's what everybody's going to try and do. Either way you look at it, it's going to be all good. We're going to make money whether the market goes up, down, sideways. It don't matter. Take our time, be patient, and get to the bread. Draco, what's up, girl?
Good morning. Good morning.
Oh, man. Gap partially filled. Key level 169.03. I'll be mindful of that. Key level 169.03. We'll be mindful of that. What's up, Ken?
I'm talking about these levels that you are looking at, like the overnight high and low. Why are you looking at those? And can you just kind of speak about the gap you were speaking about?
Yeah, for sure. So the overnight high and the overnight low are the prices that constrain the market over the night, and for me, that's pretty big information. I really want to know, like the basis of it is greed, even all of my trading scenarios, the mastery method, everything is set up off of people and their behavior. People don't like to be skipped in a line. People don't like to be skipped in a queue, and people tend to be selfish and greedy, right? So if a buyer makes their money as the market rises, they'll want it to rise forever because they're greedy, right? And if a seller makes their money as the market falls, they'll want it to fall forever because they're greedy, right? People want to make money. I wouldn't even call that greedy. I would just say people want to make money, man. So if I make money as a market up in the way, I don't want anything to stop me. So if a price can't get higher, that's because somebody stopped it. Somebody stopped it. And what I do is look from 6 p.m. to 8:20 in the morning, 6 p.m. Eastern time to 8:20 in the morning. And I try and just say, man, who stopped price? What are the prices that constrain market activity? That's my overnight high and my overnight low. Those prices right there are the ones that teach me where the market wanted to keep itself. It didn't want to break above or below these levels. And that just becomes very important to me, because if I know I have an overnight high, that's where the buyers ran out of gas and that's where the sellers took over. If I have an overnight low, that's where the sellers ran out of gas and where the buyers took over. You feel me? And I just want to keep those key levels in mind, because those prices, I have a very heavy passion for, a desire to look left on my screen. I look back at historical price action and I use it to inform me about the potential and probability of future price action. So that's just very big in my book. Like I really try and be aware of what's going on from a price perspective. Where are the buyers? Where are the sellers? And who's going to win is the basis of the mastery method. If you study a lot of different types of trading methodologies, you can study a lot of them. And there are so many, man. You got all of the different types of analysis: fundamental, technical. You have qualitative and quantitative, right? You have all kinds of analysis, and then the methodologies that people use in order to exploit those analyses. You have Ichimoku and his dragons. You have Heikin-Ashi. You have Elliott waves. You have Fibonacci. You have volume profiling, market profiling. You have volume balancing. You have stochastics. You have basic static math that creates key levels for the next day by, subtracting and adding and dividing key levels from the previous day. You have different methodologies that people use in order to technically analyze the market. But what happened with me and the mastery method was I got inspired. You feel me, Ken? Like I got inspired by Albert Einstein and Bruce Lee. Albert Einstein said anybody can make something complicated. It takes a genius to make it simple. And I want to be a genius. And we all know we got that relative, that uncle, that grandma, that grandpa, that you could be wrestling with an idea for 3-4 days, and you got this long paragraph and they just walk by you with one sentence, and that's the wisdom that you needed to get the breakthrough. And it's in that simple wisdom that we find our greatest intellect. You feel me? So that was big for me. And then the other thing was Bruce Lee. Bruce Lee inspired me because he has studied so many different methods of fighting, you know, American boxing, Chinese boxing, karate, jujitsu, taekwondo, and so many other different fighting styles. He went to, you know, research because he was interested in the combat moment. You feel what I'm saying? And what Bruce did, he looked at all those methodologies and he kind of simplified it or distilled the information so that people could approach the fighting moment quickly and they could solve any combat issues quickly. You know what I'm saying? And I thought about us as traders, us as investors, us as options traders. And we got all this information coming at us every day from all these different sources. And everybody's saying so many things, and it can be overwhelming. So for me, I just boiled everything down. If you study all of those different methodologies, man, Ichimoku and Elliott waves and Fibonacci and market profiling and volume balancing and all of these static indicators, and all that stuff, bro, you got to answer 3 questions. Every day, if you wake up and answer these 3 questions, you can make money. And the 3 questions are: where are the buyers? Where are the sellers? And who's going to win? If you can find out where the buyers are, where the sellers are, and who's going to win out of the 2, you can make a ton of money every day. So that's what I kind of teach. You know, that's why those levels are so important, because when I'm looking at the market, I'm not concerned with every price that comes out. Yeah, we got all these prices. You know what I'm saying? If you trade in something, you know, $1.20, $1.21, $1.22, $1.23, $51, $51.47, $53, you know, all of these different prices. That's, you know, if you are looking at the ES, it's $38.45, $37.92, you know, all these different prices that come out. I don't care about all of them. I only want to know where the market has a behavioral, in my opinion, a behavioral happening. Where did buyers get serious about stopping sellers? And vice versa. Where did sellers get serious about stopping buyers? Where did the bears stop the bulls? Where did the bulls stop the bears? If I can find that, those are the prices that I'm interested in. And then what I have to understand is when I get to those prices, who's going to win? That's it. That's it. If I can do that each and every day, I'll make a ton of money. So that's why students come to me, Ken, and they never traded before. They never been in the market before. And then in 6 to 8 weeks or so, they making $500, $300, $400 a day. I look at them in another couple of weeks, they're making $1,300, $1,400, $1,500 a day. Some of them doing crazy stuff like trading 50 and 60 and 100 contracts at a time. You know what I'm saying? Like, this is not because they're like, oh, they want to just sound cool on Clubhouse because they could talk about so much market information. Heck no. If you're an investor, if you're a trader, what makes you cool? Profits. It ain't about talking about it. It's about being able to do it. And it's about being able to teach the easiest pathway to success. And that's where I found my sweet spot. My sweet spot is I could take somebody that don't know nothing, tell them what I know, and in just a little while, they write on these charts. You know what I'm saying? They know how to look at this market, how to break down market information, how to just zip through it. That's really what I love to do. That's like my passion. And it's something I'm pretty good at it. You know, I always tell students, funniest thing is I tell them I might not be the best trader ever, but I don't know if you're going to find a better trading teacher. I'll be interested to find that, you know, and I humbly say that, but, you know, I can put people in on the fast track so that it's not as hard. We got Rahel. Rahel, what's up? You have a question?
Hey, no, I just wanted to come up and just echo everything that you've said.
Rahel, where you from, bro?
Yeah, so I'm from London.
What do you do?
I'm actually a professional trader / analyst. I've worked on Wall Street for the past 7 years.
Okay.
Yeah, mainly trading single stocks. So the firm that I work for, so we actually take a techno fundamental approach to stock picking.
Okay.
And by that I mean we use fundamentals to identify strong companies. So we only ever invest in high growth, liquid companies, companies that are generating, strong rates of sales growth, companies that are profitable, exposed to structural themes like EVs, genomics, robotics.
Right.
And then once we've got a list of strong fundamental companies, we use the technicals to trade in and out. So the founder of the firm, he basically studied the stock market, all the big winners going back to the 1800s. And he found that growth stocks display certain patterns before they go on big runs. And these patterns range from, a cup with handle, a double bottom, etc., etc.
Right.
So yeah, we use the technicals to get in and out of stocks. We like to add stocks when they're breaking out of one of these patterns on big volume, because typically when the stock breaks through resistance, that's a very bullish signal. We take profits regularly and then reinvest those returns and then kind of compound those gains over time.
What do you reinvest them in?
Pardon?
What do you reinvest them in?
So we reinvest it into another growth stock, but with a better technical setup. Because again, based on our studies, if you get into a name post breakout, then the stock typically rises 25 to 30% before it starts to consolidate. So we take our profits before it starts to consolidate, and then rotate into another strong fundamental name with a better technical setup. I have a very concentrated portfolio, so I only trade like one or two stocks at any one time. And again, I try and compound those gains. So my strategy is very it's high probability, high conviction, but it's very powerful as well. Very rarely do I get a trade wrong. I think last year.
I like that, boy.
Yeah.
I like that. People don't want to hear you talk your stuff, young man, but I like that. Talk your stuff. You say very rarely do I get a trade wrong. I like that. Hey, so this is what I want to do, Rahel. Let's link. I would love to link. I'm gonna follow you here on Clubhouse. I would hope that you follow me back. You feel me? And what I would love to do, if possible, let's jump on a Zoom call, because I want to see how you think through things. You feel me? Like, I want to see how you arrive at decisions. I want to see how you decide what is worth your time and what is not, because I'm always down to talk to traders and to see exactly what they feel, their mentality, their psychology, their approach when they're looking at the moment of trading, before they enter a trade, while they're in it, and then, typically how they feel after. Can you tell me a little bit about your first day at your job, when it was like, hey, you're a Wall Street analyst and trader? What was some of the first things that you maybe found weird, that you found interesting, and did you have any nerves? Tell me a little bit about that.
Yeah, sure. So when I started in the industry 7 years ago, I was what's called a traditional sell-side analyst. So the analysts that you see on CNBC, they'll come on, they'll talk about stocks. They're very focused on the fundamentals of valuation. So I was based in Europe, based in London, covering the retail sector, covering all of the kind of large cap stocks in the retail sector. So I was a very fundamental analyst, purely focused on valuation. But the problem is, if you focus purely on valuation and not on the technicals, it will inhibit your success rate in terms of getting stocks right.
Say it again, brother. Say it again, because I've been saying this forever. Everybody's reading articles and trying to figure out if a CEO is talented, but they don't know how to read a chart.
Exactly. If you don't know how to read a chart and you don't understand market psychology and how the market thinks, then you are going to get your fingers burnt. Because so my approach is, I like to invest when the fundamentals are there and when the technicals are there. Because then again, you increase your probability of success and being right. So like you say, everything that you were saying earlier about market psychology, about mastering your mind, about having a strategy, about not succumbing to fear and greed, things like that, is really, really important. So then after a short while as a kind of traditional fundamental analyst, I recently moved to my new firm, and again, we we take a techno-fundamental approach, and the method has been refined over the past 60 years by a guy called William O'Neill. Don't know if anyone's heard of him.
No.
Yeah, he's. If you just Google William O'Neill, and if you just Google some of his disciples like Mark Minervini, David Ryan, these guys are very famous private investors who became multimillionaires.
Mm-hmm.
So that's the firm that I work for, and that's the method.
How many people work in your firm, bro?
So globally, so it's quite an exclusive firm because there aren't many analysts. There's like 8 analysts globally.
Uh-huh.
But we advise all of the kind of major institutional investors across the globe.
Uh-huh.
So the hedge funds, all of the kind of major pension funds, sovereign wealth funds.
What about assets under management?
So the founder of William O'Neill, he's worth I think $1 billion, and there are portfolio managers within the firm that manage the family's assets.
Mm-hmm.
So
would you say that Rahel, that this is like a family office on steroids a bit?
Exactly. Yeah.
Okay. I think I see the setup. Setup. I like that. And where are you from originally, bro? Are you from the UK originally?
Yeah. So from the UK. I mean, I grew up in the UK, but my parents are from Bangladesh originally.
Okay. That's what's up.
Yeah, I grew up here. But yeah, I mean, one of the reasons why I wanted to jump on is because I kind of listened to a few of your rooms, and I agree with your philosophy. So I think we have a lot of similarities there.
Yeah, bro.
And I also like sharing knowledge and wisdom. I think often Wall Street makes stock picking and stock trading a lot more complex than it should be, and it really isn't. Like you said, if you can master certain skills, if you can manage your emotions, and if you can have a plan and strategy that works, then over time, you will be successful.
Mm-hmm. Showtime.
I was gonna say, as you reset the room real quick, and I know you got the room open, and just let us know where we are.
Oh man, it's just a pleasure. I love being able to speak to folks. Man, Rahel, thank you so much for your candor today. This morning, it was refreshing to just meet somebody new, somebody that can talk about the emotional side, somebody that can talk about things from an institutional perspective and see that basically the methodology that I promote is an institutional way of looking at things. I appreciate that. My name is Jason Sweeting. I'm a trader from Miami, Florida. Everybody calls me Jay the Trader, and the reason they do that is because I love to trade, but more so, I love teaching people how to do it. Something happened to me a little while ago where making money got boring, and I taught somebody a little bit of what I knew, and it worked for them. Watching that light bulb go off in their mind, watching that spark go off, man, that really shook me. It shook me to the core because I realized now that what I knew how to do was more important than I ever thought it could be. So since then, I've been on this this voyage, getting to know people, teaching people how to get to the bread. I trade the US 30-year bond market. I'm a futures trader. My methodologies are powerful. Students learn what I teach, and they manage their long-term portfolios with it. They manage their options trades with it. They trade the hog futures and the gold and oil and silver and the NASDAQ and the Russell and all the rest of the indexes. Man, and I just love doing this. I really appreciate you all hanging out with me this morning. We got into some technical things. I'm looking at some upside action today on the bonds. Hopefully we can get some upside action, and then, we can see about maybe breaking out above the overnight high. That would make me feel good today. At least that's what I'm looking at right now. Let's keep our eye on the upside of the bonds and maybe even the downside of the S&P. And we'll have some fun like that. As always, if you have questions, hit me up, man. I'm a real person. Hit me up on Facebook or Instagram or anything like that so that we can really link up, because I love to make sure that your question get answered. Oftentimes, we're so skeptical. And the reason we're so skeptical is because it seems too good to be true that someone can sit down and for 5 or 10 minutes make $1,000 or $900 or $700. And it's not, I don't want you to be skeptical. I just want you to understand that there's a different way to earn money. It's a different possibility out there, and I offer it to you. I want you to check it out for yourself. So Facebook and Twitch and Periscope and YouTube and everybody on Clubhouse, man. The clock on the wall says that's about all. I enjoyed y'all. I had a ball, but boom, boom, skeet, skeet. That's it. I got to split. I got to get inside this trade room. We got bullies waiting. We got bullies waiting. We've got bullies waiting. I want to say it's 117 people in the trade room right now. So we got to go get to this money. If you have any questions, holler at me, man. You already know what it is. Much love.
Hey, Jay, before you head out, can I say one thing?
Of course.
I took your webinar. My husband and I took the webinar last night, and he's super fired up to get into the course. I just want to mention to the listeners here on Clubhouse, if you haven't taken the time to invest those 2 hours, I encourage you to do it this coming Sunday. We're going to do it again, and then we're going to log it right into the Teachable and get going. So I just wanted to make sure I'm not big up in Jay in this moment. I'm saying for my husband who hasn't been as close to the options trading, got the bond information from Jay last night and is ready to go. So I just encourage y'all in the audience, let's get this done, y'all. I'm
telling you, man. Every Sunday at 3:30 p.m., every Wednesday at 8:30 p.m., I am teaching live. I love teaching live. So you can click the link in my bio on Instagram and you can sign up for a live free training. I love doing it. I love answering questions because it's about time that we get our chance to grab this information and change our financial lives drastically. I always love to say investing pays you when you're 60, but trading pays you in 60 minutes, and we can get to the bread. There are 252 days, trading days in a year, and if I can show you how to make $200 a day, you're making $50,000 a year. Just think about that. And I'm telling you, I step over $200 trades like they no good no more. So I'm telling you, you really want to join and just change your picture because it's time for it. You know, it's time for it. It's time out for the bull. It's time out for the thinking small. It's time for investing in yourself. That's the investment you should make. So let's get to it together. All right. Much love, y'all.